Let's get some snap reaction and hit up Peter Schiff, CEO at Euro Pacific Capital. Assets under management, AUM, at last count, $2 billion with a B. He joins us live out of Weston over in Connecticut. Peter, good to talk to you and appreciate your time. What do you make of what's going on in China?
Are you talking about the stock market or the economy?
The stock market, the sell down.
Yeah, well, look how much that market rose in such a short period of time. So nothing goes in a straight line. I mean, obviously, you're going to get volatility, you're going to get corrections. But, long term, I remain very constructive on both the economy in China and in the markets. So, for a long-term investor, I think it's a good, time to be buying stocks. That doesn't mean it can't go lower from here. But ultimately, I believe that the Chinese market will respond very favorably when the U.S. ends up launching QE4.
Wow. Okay, we'll get to that in just a bit. But you're saying there could be further downside from here, but you would be brave enough to buy on the way down?
Yeah, look, I'm a long-term buyer of Chinese names. We buy a lot of Chinese names through Hong Kong as well. But yeah, I think that's where you want to be as a long-term investor. There's a lot of wealth being created in China, legitimate wealth. Are there problems? Sure. The problem is that their currency is pegged to the dollar, and as a result of maintaining that peg, the Central Bank of China does a lot of foolish things. But I think the Fed is doing even more foolish things, and I think ultimately, the fundamentals in China are much better than they are in the United States.
Peter, when I take a look at what's going on over in Japan, there are some similarities with what's going on in the U.S. as well. We've had 13 months now of 200,000 plus non-farm job growth. That's the good news. Housing seems to be steadily coming back. But the consumer, the windfall that they've enjoyed from this halving of gasoline prices over the last year or so, starting from last June, they're saving. They're not spending that. Over in Japan, same thing. Labor market continues to tighten. Some people say to maybe remarkable levels, but we're not seeing it in the spending. Why?
Well, the central banks are making the same mistakes in both nations. They're printing too much money, and a lack of inflation is not a problem. That's a good thing. Deliberately trying to create inflation, that's one of the reasons that consumers can't spend, is because things are too expensive. If you want your consumers to spend, lower prices, and then they'll spend. But of course, the problem with the jobs in the United States is they're part-time jobs. They're low-paying jobs. So Americans need the savings on gasoline to spend it at the supermarket or to spend it on rising healthcare costs. And unfortunately, now gas prices have been rising, and so that lifeline is being yanked away. I think we're at the doorstep of a recession in the United States, and I think, unfortunately, we're going to be doing even more QE, which is going to do even more damage to the U.S. economy.
Oh, man, doesn't sound good. And the second read on Q1 GDP out tonight, Asia time, everybody's expecting a negative number. How bad do you think it's going to be first?
Well, I don't think it's going to be much worse than is expected, but they're already prepared to dismiss it. You had the Federal Reserve in San Francisco come out and say they're going to double seasonally adjust it anyway when they look at it. So people aren't going to care, even if it's -1 or greater. They're going to say, we'll call it 1.8 or 2, and they're already excusing it. Meanwhile, I think the second quarter is also going to be very weak. And how are they going to blame that on the weather?
Yeah, okay, so you don't buy this whole, it's aberrational, it's just a one-off, we're going to get back to it, and we're going to see a pickup and a rebound in Q2. What's going to hold the economy back? Is it an inventory overhang or something more?
Well, inventory is a part of it. That's one of the things that goosed the GDP last year. You had a lot of businesses that bought into this recovery story, and so they loaded up on inventory that they can't sell because their consumers are too broke to buy it because their part-time paychecks don't give enough spending power. So, yes, there is too much inventory, and also we got a boost last year from Obamacare spending. But, if people are spending more money on health care, they have less money to spend on other things. So the economy is going to, collapse beneath the weight of all these problems, and the Fed, unfortunately, is going to rescue it with the same kind of toxic medicine that made it so sick in the first place, which is more quantitative easing.
All right, so hold on here. I mean, you're saying the U.S. economy is just on the cusp of recession. We're going to go back there. You think the Fed, though, is on the cusp of raising interest rates? That's probably, in your view, the last thing they should be doing.
No, they should be doing that, but they won't be doing that. They're just bluffing about rate hikes because they want to pretend that the economy is actually strong enough to withstand higher interest rates. But the economy is in a gigantic bubble, and if the Fed raises rates, they're going to prick it. Now, is it possible they can do a trivial rate hike, one and done? Maybe, but I think that's dangerous for the Fed because the markets may react very strongly to that, and they may be forced to back away very quickly and launch QE4 even sooner than if they don't raise rates at all. But I think the Fed is just trying to talk the economy up. The Fed is trying to pretend that its medicine worked, even though the patient is sicker than ever.
Wow. What are you telling clients then to do?
Well, get out of the dollar. I mean, it's a gift horse right now. We have all these foolish speculators who believe the Fed, who think they've created a legitimate recovery. They don't know it's a bubble. They're piling into the dollar. I think they're going to get burned, but it does make it easier for my clients to get rid of their overpriced dollars and buy a lot of assets on sale all around the world, and that's what we're doing.
Wow. Okay, ex-U.S. Got it. Peter, good to talk to you. Peter Schiff, Euro Pacific Capital, joining us live out of Connecticut there.